All right, good evening, guys. Ken at Tortoise Capital, Saturday night podcast, February 25th, 2023. So this is swing trades tonight. So I had a email from Dustin. He had asked me in the daily reports what criteria is programmed for the triple screen alerts. And this is how that's set up. So there's three tests. The first one is the ADX test, and that searches for, it tests to see on this symbol, is it greater than 25? If the ADX is greater than 25, then we have a strong trend. It then checks the DI test, the directional index, which is the components of the ADX. And the plus DI has to be stronger than the minus DI, and that means that it's an uptrend. Because when you, in the ADX, when you have two bars like that, it will measure how much of the price action today was greater than yesterday's high and how much was lower, and then it takes the one that was higher and that adds, in this case, if DI is higher, it will add that to the ADX, and so you get an increasing. When you get more up price action than low, then you're increasing the direction of the trend or strength of the trend. And so ADX gives you a measure of strength of trend. It doesn't tell you direction. You have to look at the plus DI and the minus DI. So in this case, the first test is ADX, yes, better than 25. The directional index test says, yes, it's an upward trend. Then the pullback has to be lower than the 20-day moving average. So the pattern looks essentially like this. You have some strongly trending symbol. It has a temporary pullback. You have a comparison to the 20-day high, or I'm sorry, 20-day moving average, I should say. So if it's below the 20-day moving average, that gives you a 1. And then for the traffic light on the spreadsheet to fire, it looks at this column, the sum of the tests. So if all three of those tests are true, then you get a 3, and then that will turn the signal lamp to green, saying that, yes, we have a triple screen set up. And in this case, the top two symbols had 3s. So like this one here fails because it's not greater than 25, and the minus DI is stronger than the plus DI, but it is below its 20-day moving average, so it only sums to 1, etc. Okay. So then to determine if that's a good enough trade, the mechanical system says simply find the 10-day high, calculate today's range, and then determine if there's at least a 2-to-1 move back to the 10-day high using a range risk as the unit of R. If that's true, then you would see that the reward to risk ratio column in the daily report would fire because it's better than 2-to-1. So that's the form of the triple screen. That's developed by Alexander Elder. It's my variation of the system because in the triple screen, the way he wrote it, if you were doing it on a weekly, daily, and hourly, you would look for a strong trend on the weekly. You would look for a pullback on the daily, and then you would look for a breakout on the hourly charts. Now, it turns out that to simplify, my simplification is that I chose 25 ADX on the daily, if the daily ADX is 25 and the DI is greater than the minus DI, and then you went and looked at the weekly charts, you would always see a strong trend. Math. So I don't have to actually run that on weeklies. And then the pullback to the 20-day, below the 20-day moving average is a reasonable, that's like the turtles setup, standard technical analysis. Now the entry for the hourly breakout, if you go strictly by the triple screen and the hourly, that means you have to be checked in to the market, right? You have to be a day trader to get that thing started. So if that's where the market closed, right here in the previous day, and then this is the blue line indicating an opening here, I should say. That should be blue. And then it opened here, and you get this, whatever the first candle is, no matter where it opens. So in this case, we would have had it open here, hit this low, made this high, and then closed here. Then the next bar opens here. The Alexander Elder entry is simply, no matter what happens down here below, if price in this next hour goes through that green line, then you have an entry on the hourly, and then you use something like a 2 times ATR stop in his world, and then you use the daily bars to manage the exit. Remember, just trail it with a 2 ATR. This requires you to be in the market at that first hour to do that. So the simplification that we use is simply a mechanical entry. And by mechanical entry, what I mean is, if this was yesterday's bar, it opened here and closed there, and all the other elements of the triple screen were in play, then we just simply compute the mechanical entry there and a standard exit there. And then no matter, when you can set that up the day before, and as long as it opens inside yesterday's range, anywhere in here in the yellow zone, if it takes out through here, then you're long. So that's our variation on the Alexander Elder triple screen. I will upload the rule set, the mechanical rule set there. You can get it in the swing trade course as well. So that's the answer to Dustin. Let's go to all right, we'll go to Chi Wing Chong's RL30 slope, the Z-score of the sectors, and we're feeling that compound critical state happening with everything going down together. Even technology, the leader, is failing at the same rate as the market, as finance, as materials, and as energy. Energy is has fallen so far that I'm actually interested in the rebound play. I'm looking for that to turn next, because just like here, energy turned first the last time, and made that strong move. So I'm looking for energy to recover. So we are in defensive mode right now, and the only thing that's working to the upside is that actually staples began to look a little better. That as the S&P broad market and the XLY consumer discretionary are failing, XLP is beginning to raise up and shows some recovery. So that's a reflection of the decay in the market strength, that defensive sectors and staples are doing a little better. Not surprising. Here's Charles with a frame on CDW. So he's using the weekly, daily 65-minute. And he's identified this blue box here as a reasonable range for recovery back to the top. We had the market close inside this little risk box right here. If this were to fail, I'm interpreting this as failure from here would be a short. First target here, second target 193.34 comes. Now you have to go over to the daily chart to see. So if he gets short here, that first target is 196.34, which is the belly of the RL10 on the 30. And then the next one, 193.34, is the belly of the RL10 on the daily. He has the next below that, 189, he's taken as the support. That used to be resistance, and then when it broke through, that should be support. So he's identified 3 possible targets to the downside. So I like that short. And I would probably try to get a second position on this one right here, if that fits. Because that's right about, if that's 1R, that's about the 2R battle drill right there. Then to the upside, he's looking at a PSAR flip. And again, he would use this as the risk box, because if this went up and then failed, he'd want to stop and reverse not later than that. And then he's looking at another entry at 209.42, which is, to me, approximately this, the peak of the dragon, and I guess also the RL90, but it's really the peak of the dragon. So he's got almost 2R available in here. If that's 1 unit of risk, he's got 1, 2, 2R battle drill. That would be 4R to the top. And then if it broke north of here, that'd be clear sailing. So I like this one in both directions. It's postured for what happens on a market rebound on something that's been pretty strong. It's had 2 strong legs up in the daily. It's teasing this higher level right here. You know, this leg up and then recovery is coming back to test what was once resistance. We're going to see if this is support now. If that's support, we should see a nice move up, and that would be this move. And then a break above this, it'd be free and clear. But if that fails, then it's back into this congestion. So that's a good looking frame right there. Very clear scenario-based trading on that one. Here's one from Peter. It didn't have time to get that in for the Friday night review, so while we're here, we'll just take a quick look at it. Yeah, that was the gap down and then a collapsing dragon entry right here, and that would have had a standard risk like right about there. He starts his trade here. That's missing about 1R already. Now, when you're this far in the green, you've already got 1R in hand. in this case, we let a 1R win come all the way back to no lose plus dinner for 2. So in that case, really what we're looking at is that we should be having an exit somewhere in this area instead of here. And that should be our victory. And then I would be taking this short here on a COTA 2. That one would probably scratch. And then this is ambitious. I would like to see it right here. If you're going to take that trade here, you might as well take it here because you're already through the PSAR, right? You're already through the PSAR. So go ahead, take that in here. The argument is you're going to get back to the VWAP, which looks like this. So why not take that? Now, when this doesn't work, don't take a full 1R loss because you were actually almost +1 in hand, and then that turned into a -1. So we should at least be scratching that. Then this should be short, and then you won't lose money on that trade if you take it at the edge of the dragon. Then this entry is late because this barely got through the dragon. When this rolled over, we should be short here instead of here. And then that's a scratch instead of a loss. This is where our entry should be on the SSC. That's actually a COTA 2 because you got that rising lows. You on this R10 wiggle, you could add this as it crosses the VWAP, which you did, and that's fine. On that nice run up, you still were able to get out of that and preserve a good win. This is starting to get in the middle of the day, but you know that's a legitimate short. Probably scratches. That's another short. That pays off in a big way. And then this is where we should be long. I'd probably add a second position there and exit here. I'd have been tempted to take that short because you had 2 lows, but then a quick reversal. Now we should be reversing right here instead of all the way up here, and then you get paid on that. And then short here. So there's a lot more going on there on the E-minis that was available. This is Peter on Devon Energy. Is that an OR3? Yeah, I guess it is. Okay. Then this should be short and get paid. This is your next COTA 2 here. That's a little late getting in. Oh, it looks like this. You may have been short here and exited over here. No, that's way too late. Let me look at this again. No, okay, I see. All right. Now, this was long and then covered. That should be short. Then you'll get paid in here. Then this entry, I believe, should be down in here right after it leaves the dragon after the higher low. Good exit management here. I like that one. The 1, 2, 3 exit would be here rather than here. That's a great short. I think you could take a second one short here on the R10 wiggle after it crosses through the VWAP. Then it fails more. Then I would try to be out a little sooner than this, especially if you had the second position in. You wouldn't want to have that much in hand on the second position and then get out of it right here. That's a reasonable effort. This would, either one of these would be a re-entry that you could get that would pay off. All right, we're looking at Dan's work here. Okay, so we're looking at Shell. And this is daily chart and 30-minute chart. And we generally have on the daily some rising lows. So Kata 2 is all over the place. And what you like is the fact that the previous burst was really strong. That was actually better than the previous. So this is a stronger leg up than those two. Clear weakness in energy. Remember, it was leading the way down. And it's finding support right around the PSAR. That's good. And now it took out the previous bar's high. And now he's got this frame in with a mechanical entry north. And an R stat stop down here. That looks pretty good. Reasonable 2R available to the upside. It just has to get above that previous peak. And it's had 2 pretty good days that it did not fail. And now his plan is to enter on the 30-minute chart. He's got a very clear Kata 2 here. Could have entered it right here. But he wanted to give it the weekend and see what happens. So now what he's looking to see is he wants to enter between 60.50 and 60.80. So somewhere in this region, he's looking to enter anywhere inside here at the open, I presume. Then using this as the initial stop. And then once this starts moving, he would just take the PSAR and follow that. That's fine. If it starts to stall where he would expect it to stall, he would accelerate that and capture what he can. If still alive by the end of the day, sell a partial position and keep the turbo swing with a wider daily stop. So what he's going to do is preserve any gains being made here on the 30-minute chart with the PSAR, but then sell a portion and then revert to the daily swing all the way down here, and that way he gives it room to breathe. So that's a perfectly executed plan. He notices that it went winter, spring, summer, fall, and just starting the summer again, and that's a good sign. So everything looks good on that one to me, Dan. I think you're in great shape. Any questions of me?
No. Yeah, sounds like it made sense. That's good.
Okay. Let's see. I reviewed the personal swing trade portfolio there. Maybe I'll do a quick speed run on the. We got some time here. I want to take a look at my tactical guys here. And I'm going to sort this one by reward to risk ratio. And I want to look at the ones that are better than 2 to 1. So the boundary is U.S. Steel. Okay, so what I'm looking at on this one is I've sorted this by reward to risk ratio. And I noticed that Microsoft is 8 to 1, and U.S. Steel is down here at 2 to 1. So I actually took the entry on the 30-minute for U.S. Steel on Friday. So I like that. So let's start at the top of the list with Microsoft. And I want to go to the daily report just so that we can see what those frames are looking like. So Microsoft, you'll notice is a 8-to-1. The range stat is about $8.50. And here's the blue box represents the 10-day look back, right? So the top of the 10-day high is here. And here's that little doji. And so that's the range risk. So there's 8 of those. 4, 5, 6, 7, 8. There's 8 of those up to the 10-day high, and that's how you get a 10-to-1. Or I'm sorry, 8-to-1. I would also sort of take the target of peak of the RL10, peak of the dragon. I think I'd probably go here as well. Like if this moved out and got to the peak of the previous day's low, 2-day high, and started to fail, I'd probably cash that because it was not able to get back up into the dragon. So there's some clear markers in there. At 2-to-1, I would start looking to preserve gains. If I go to the 30-minute, yeah, this looks to me like failure to fail further. So that now I can see the 10-day high was made back here. Here's my 5-day box, and this was a gap down in that doji, and then it refused to lose any further. So the mechanical entry is above here, but I think on an intraday with a 30-minute bar, if it dared to open in here and went up through that into the fat part of that box right there, I think I could take that long and then use that as a intraday risk box. And then if it got through here, I'd be happy to use the money that I made in here on the shorter term to fund the swing trade. And then that's 8-to-1 to the 10-day high. So I like that. I'm liking all that. We'll go check lithium now. So again, you can see lithium has that same kind of feature. Harsh sell-off from the 10-day high. This is one where on the failure, like if that fails through here, that's also a trade because it's breaking a 30-day low, and then there's nothing to stop it from getting all the way down here on a tiny little risk box. So I like that in both directions. And that's one of the features of this method of reward to risk ratio framing, is that the ones that float to the high of the list are ones that have stalled, they have slowed down their violent selling, but there is a significant move from the 10-day high. So there's plenty of room to recover. But if it fails, then you have all of that previous trend that makes it easy to believe in a downside trend. So that's what makes this a compound critical state. Wood, oh, even better, because now if lumber fails here, it's a violation of the 30-day low and that support level. This could be something really special. Yep, if that fails, then your next support level is here, here, and here. And on a tiny little risk, look, you got 1, 2, 3-to-1 just to the first support. And if that breaks, it's not unusual to see moves of that size. That could make that in one day. But the recovery up days like that, this thing could get to the 5-day high in one day too. So wood is in great shape. Here's that Devon trade. Yeah, I like all of that. Nice tight recovery. Here's Intel. Yeah, Intel is at 6.5 to 1, and I've got that one short on the 30-minute, if I recall. Oh no, I saved that one. Dang it. Yeah, so 2 days ago I had that one in covered, and then it failed further. Now, if this fails below here, this is one to be short massively. Massively. Yeah. Yeah, I like that one. I like that one in both directions. That's the only Godzilla out of the tactical set. XLY, on the other hand, has had a much more orderly sell-off here on the 10-day, and it actually closed higher than it opened, which is like the first step towards this little bit of recovery. But again, if that fails, you got to believe it's coming to the 30-day low. And if that fails, coming to here. I love this time in the market, to be honest. Apple is pretty strong. It has not given back much. That looks almost like a triple screen, if you were going to hold me to it. Strong upward trend. Pulled back through the PSAR, terminated in a doji. That's not really panic selling. That's just a normal respiratory pause after a strong move up. So that's one I think you could play easily as a COTA 2. Yeah. And the move to the 10-day high is good on its own. It's a 6 to 1 just getting to the 10-day high. So you don't even have to think about it breaking out above this. It's 6 to 1 just to get back here. That's a great looking trade. I'll leave the rest to your judgment. I got a phone call coming in here shortly. But this is a really powerful tool for framing. If you've got a list of symbols in your herd, I think of this as the herd in the paddock there, and then some of them, as they go through each of their own little life cycles, some number of them, are primed, ready to leave the cage and launch on their little swing trade. And all of these that are better than 5 to 1 are in pretty good shape for that. So I'm liking all of those. All right, that's everything I got for tonight. I'll leave the rest to you. Tomorrow morning at 10, Dan will do the Creativity 202 normal session. And then I think we're going to do a Tuesday night instead of Monday nights for this cohort. So it'll be Sunday mornings at 10 in here, and then Tuesday night at 7.
I was thinking more Tuesday myself.
Yeah,
It works better for me.
Yeah, my brother Bill and Luke, and I think Damian Bricka were going to be in there for that. So Tuesday night could be a really good cohort that's developing. You could maintain your connection with Luke and Bill there, and Damian's is helping out a lot. He's got some coding skills and is a super trader. You may know him from VTI already.
I think we didn't overlap though, or somehow.
Okay.
Yeah, I only met him in the trading room with Bill a couple times.
Oh, okay. Yeah, and I know he's interested in swing trading as well. So
Yeah.
There we are, and we'll probably get Ernie in there too on Tuesday nights. All right, so that's everything I got. I'll get this published and posted, and catch you guys tomorrow.